Remember the pandemic investing frenzy when millions of first-time retail investors entered the market? At its peak, individual intraday traders surged from 1.49 million in FY19 to 7.83 million in FY22. That's according to SEBI. But that explosive retail wave is now losing steam. In FY26, 3.5 million investors stopped actively trading on the National Stock Exchange, the first annual drop in 3 years and the steepest ever. So what's really changed? And is retail participation really fading? Let's understand in Markets this week. The NSE's active investor base fell from 49.2 million in FY25 to 45.8 million in FY26. That's a 7% drop in just 1 year after a sharp 20% surge the year before. And this decline wasn't evenly spread. Over 70% of the fall came from just 3 discount brokerages. Zerodha lost 995,000 users, the biggest drop. Angel One saw 815,000 accounts go inactive, and Upstox shed 760,000 investors. In contrast, Grow's active base remained largely stable at 12.94 million. So why are investors exiting? Well, the biggest reason lies in the market itself. Now, FY26 was a tough year. The Nifty 50 fell 5.1%, its worst performance since FY20. Many investors who entered during the bull run saw flat returns or losses. At the same time, valuations were stretched, corporate earnings remained soft, and foreign investors were persistent sellers. Global cues didn't help either. The West Asia conflict pushed crude oil prices above $100 a barrel, raising concerns around inflation and India's fiscal position. Global brokerages also turned cautious. Nomura, Goldman Sachs, and Morgan Stanley, all of them downgraded Indian equities in early 2026. And then came tighter regulation. SEBI's new rules on futures and options curbed excessive speculative trading. As a result, NSE's F&O turnover fell 18% in FY26. IPO performance added to the disappointment. Several listings delivered muted or weak gains, denting retail confidence further. But this is not a uniform exit. Some traditional bank-backed brokerages actually added clients. Paytm Money gained 212,000 users. SBI Cap Securities added 182,000 accounts, and ICICI Securities added 141,000. So is the retail investing wave fading? Well, the data suggests something more nuanced. New Demat account additions slowed to 32 million in FY26 from 41 million in FY25. Cash market turnover also declined 6% to 1.13 lakh crore rupees. But this looks less like an exodus and more like a shift. Some investors are stepping back after losses, while others are moving away from high-frequency trading towards more guided investing. So essentially what it means is that the retail boom is not over, it is maturing. That's it for this episode of Markets This Week. Stay tuned to Business Standard for more such stories on markets and the economy.